Hey guys, welcome back to Respawn and Retire. Today we're going to be going through our 1 month update. So it's been exactly 1 month since we first uploaded, and I just wanted to give you a quick breakdown of where the portfolio is at. So currently we're sitting at about $14,547 in our portfolio. Now, as you can see from the graph in the video, that's broken up into a range of holdings. So let's just go through them quickly because we've done quite well. We've made about 4.31%. I wish it was 14, which is approximately $547. Now, looking at the holdings today, we can see that NDQ is definitely our largest holding. We've got $2,199 and we're up about 9.1%. We've had 2 buy-in opportunities in that, and we're just riding the wave up. Our best performer is our semiconductor ETF, and we've managed to get about 26% on that, and I'm really, really happy with that. It's at an all-time high. A lot of these holdings are all-time highs, and I really hope for a small pullback, but, you know, we're just going to be able to, we're just going to have to take what we can get, really. Next on there is the IOO, which is our global blue chip ETF. We're at about 1,148, 7.3%. A new one we've got is our transition metals, which is XMET. We're up about 9.8%. Then IVV, we're up about 5.5%. Qual, we're sitting relatively flat. URA and NM, which is our uranium ETF. We're down a tiny bit, 4.3. I'm not too concerned. That's more of a long-term hold. VGE, we've got about $1,000 in that. We're relatively flat, along with a little bit of cash. So the portfolio is comprised of $1,000 worth of cash. FANG, which we just added only 3 days ago, that's sitting at about $982. And then VGS and PME are down. PME is down 15%. That's actually our worst stock to date at the moment. Healthcare is just getting absolutely smashed. And I'm not too concerned about that. I mean, if you look at the financials of PME, it's just crazy. It's just a machine when it comes to generating profit with such low margins. So this is a long-term hold that we're going to be looking at for a while, and I think it will bounce back. It's just going through some stuff with a crazy high PE ratio, but the business itself is still super solid. And then we have one speculative trade with a ARU, which is a rare earth minerals. We're up 9% on that, and it's sitting, I'm not sure why it's saying that it's at $99, but it's sitting at just under about 850, I think. Like it's not super big. So that's our current portfolio. I'm really happy with how we've started. Obviously, we started the channel only 1 month ago, and we've had so much going on lately. We've had the Iran fuel crisis. We've had inflation going crazy at the moment. We've had a lot of buying opportunities to jump in on. We've had the largest reporting season ever with big tech, with all the big tech companies going on the same day. We've got semiconductors going crazy, and now we've just had the federal budget get released. So we've had a lot going on. The market's been all over the place. Hopefully things settle down soon, and we can see maybe just some sideways trends for a little bit, just to consolidate and not have such big swings. The portfolio itself is at it was at $10,000. Now we're at $14,500. So I'm very happy with how that's gone over the past month. We're just under $500 in profit at the moment. We still have $1,000 in cash just sitting off to the side that we'll hopefully look to top up on. Now, moving into the next 4 weeks, the next month's worth of buys, the things I'm looking to buy and top up on is definitely NDQ. We're going to continue to buy NDQ. I think the story of what's going on with AI and the results that we got only a couple of weeks ago are just going to be continue to push those stocks up further. So we'll continue to buy an NDQ and IOO. We are going to wait a little bit longer before we start putting money into PME and uranium, just until the conflict is completely gone, and we can see just where the playing pieces, where the chess pieces are. But I'm definitely going to be watching those stocks there because I would love to average down. I'm just not too sure how much further I've got to go. We already have positions in URNM and PME, so it's not like we aren't going to catch the swing up. It's just about trying to figure out when the swing up is going to happen and then hopefully averaging down. Now, only a few days ago, I think it was 2 days ago, we had the federal budget for the Australian federal budget come out, and my immediate thoughts on this was, as a young person, only 26, I was quite shocked at just how bad it was. I thought that the whole budget was going to be designed to help young people get into the market, get into the housing market, and deal with that intergenerational disparity or whatever they were calling it. But it just feels like the federal budget is just more taxes, and not too happy about that, especially with the capital gains tax that they've changed. So the good news is, at least, is that ETFs have now become more valuable, along with stocks that pay fully franked dividends. Obviously, trading is not valuable anymore, or well, is less valuable due to the higher tax rate now that we now have the 50% what is that called, capital gains tax, CGT. Now have the 50% off on that anymore. So ETFs and long-term holds are definitely going to be more valuable. Companies that are paying dividends that are fully franked, so that way you don't have to pay more taxes on it, is definitely going to be more valuable. And superannuation is going to be more valuable because we aren't going to be selling that. The bad news is that when I do eventually sell my core holdings, because remember, the goal is to get to $2 million. When I do eventually sell my portfolio to move from growth to dividends, we're going to pay approximately 10 to 15% more taxes, assuming that we haven't changed the code. I mean, fingers crossed that they change some of this. I'm not really a fan of all these extra taxes, and hopefully by the time we are 40, we aren't dealing with this. But yeah, the bad news is that when we do sell everything and move over to more of a dividend holding, we're going to be paying a lot more tax than that. Now, the changes take effect from July 1st, 2027. So we've got about 13 months to continue all of our short-term plans. So as you can see, we actually have a lot of thematic ETFs. So a lot of and we have a few speculative ones as well. And a lot of these, we will be cycling out of. So things like semi, eventually we will cycle out of semi. Eventually we will cycle out of XMET, we'll cycle out of uranium, we'll be cycling out of FANG, we'll be cycling out of a bunch of these. Once I feel the story is over, and we'll take our profit and rotate into the next thing. We'll always have our core holdings: IOO, NDQ, IVV, VGE, VGS. We'll always have our core holdings that we'll be holding, and we'll continue to stock up on. So we've got about 13 months to continue to use these thematic trades, try and push the portfolio higher, try to continue to run up the growth, and then post July 1st, 2027, we're going to have to come up with a different strategy. We won't know what that is. 13 months is a long time away, and we just never know what the landscape's going to be by then. So just a quick recap, we're up $4,500 as a portfolio. Okay, 13.5 is actually invested. 14.5 is the total portfolio, though. This is only our first month. I feel like we've done really well. We're up 4.31%, and yeah, like, share, and subscribe. And I'm looking forward to continue to update you guys as we continue to invest.